Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after an explosive week following the collection of economic data and also interest rate hikes, the path of the Australian dollar remains uncertain since taking heavy casualties due to the rejection that was around 68.45, a very heavy candle that followed and now puts some doubt on terms of the topside challenge due to the technicals remaining somewhat negative. Looking at the current pattern, the market now looks towards a key support level of 66.60, and a break there would give further exposure with the 60-day moving average coming in around 65.35.45 and reassess, with the resistance now seen around 67.45. Viewing euro, while the market did post an engulfing candle or bearish outside range day, that has put further stress to the downside, but still needs confirmation to support this negative candle, and that is if we see a break of 105.70, that would give further conclusions to the downside and look to the objective, which is around 104.40, which I just outlined just somewhere around this region where this bottom comes in, and also from that strong hammer that was posted as well. Last week, the word hawk echoed worldwide following a raft of central banks jacking up interest rates last week, and that is to reaffirm the fight to tame inflation, which doesn't appear to be over as of yet. Interest rates went up in Europe, Britain, Switzerland, Denmark, Norway, Mexico, and even in Taiwan on Thursday, following the US Federal Reserve Open Market Committee rate hike a day before. The central bankers vowing to keep raising rates until inflation has cooled. Last Wednesday, the US Federal Reserve increased the fund rates by 50 basis points to a range of 4.25 to 4.5, its highest level in 15 years. The US Fed policy forecasts that the central bank's rate will reach a range of 5 to 5.25 by sometime next year. So looking at the technicals, as I mentioned, the key level, if it does confirm this engulfing candle, is at 105.70 to give a target of 104.40 with the resistance. However, still holding at that top side at 107.20. Wait for the break, as we should not abandon the top side in case we get a rejection from here. The dollar index still remains somewhat mixed after the price took a challenge to the top side, but then found yen strength, rejecting that resistance around the close 138, and now looks to a mixed price action to the start of this week. In light of the pattern, there is still room to reach 135.5 to the downside and then reassess from there. And we should not abandon the top side as of yet, because the market still holds to a positive MACD that could see a snap to the upside if 135.5 is rejected. Sterling, the market still is somewhat negative due to that topside rejection that came in roughly around 124 figure 30 area. In light of the pattern, we're still somewhat heavy and therefore could see a further tumble, that is, with the target seen at 120.25 and then reassess from there. So looking at the bottom side of this range, it's somewhere around this area here where this candle holds relatively firm and may find demand if we do return to this region, with the resistance seen minor at 121.70. To some surprise, the market found good momentum for gold after rejecting 1,770. The market is now looking towards that 1,800 handle. If we see a clearance there, that would give further scope towards the top side of 1,830. However, with that being said, based on the technical assessment, the RSI is still weak and the MACD is as well. So my call to the upside has little merit, but still, given from the rejection from 1,770, has put the bulls in a better position, but still have a lot of work to do to the top side to even get further momentum to ignite. Failing this, and with 1,797.99 holding, then we could see a return to the downside with the key level still remaining at 1,770 and reassess. Wrapping up with oil, the market took out the downside level. That was around the 76 region, now puts further scope to the downside to around 74.5 and reassess from there. In light of the pattern, the market is still a little bit weak, but the MACD is holding, so we could see one more test to the upside. But resistance beyond 75.5 could see very much good supply returning towards 77. If we see the lack of momentum returning, then overall the risk still may be down towards that 71 figure 45 reassess. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the new week.